In today's video, I'm going to teach you how to record a vehicle purchase in QuickBooks Online. When you buy a vehicle for your business, it's not just a regular expense. It's considered a fixed asset, and you want to set it up correctly so your reports, your loan balance, and your future depreciation all stay accurate. I'll walk you through this step-by-step inside QuickBooks Online. First, let's make sure you have the right account set up for the vehicle. In QuickBooks, go to the gear icon in the upper right, then choose Chart of Accounts. In the Chart of Accounts, click the New button. For the account type, choose Fixed Asset. For the detail type, pick something appropriate, such as Vehicles and Equipment. Give the account a clear name, like the make or model of the vehicle, so you can recognize it easily later. If you plan to track depreciation directly in QuickBooks, you can check the box to track depreciation for this asset. Save the new account, and now you're ready to record the purchase. Next, we'll record the purchase using a journal entry. Click the New button, and under the Other column, select Journal Entry. At the top, make sure the date matches the actual purchase date of the vehicle. On the first line of the journal entry, select the vehicle asset account you just created. In the Debit column, enter the full purchase price of the vehicle. This step increases the value of your fixed assets on the balance sheet. On the second line, choose the liability account that represents your auto loan, or another loan account you use for this purchase. In the credit column, enter the same purchase price amount. This step records the amount you owe to the lender. If you made a down payment at the time of purchase, you'll handle that with a separate transaction. You can use an expense or another journal entry to debit the liability account for the down payment amount and credit the bank or cash account that you paid from. That reduces the loan and shows the money leaving your bank. Finally, let's talk about recording payments going forward. For monthly loan payments, you want to separate principal and interest. You can use a journal entry where you debit the loan liability account for the principal portion and debit your interest expense account for the interest portion. Then credit your bank account for the total payment. If you prefer, you can do this using New and then Expense, choosing the correct accounts on separate lines. If you purchase the vehicle outright with cash or from your bank, record it as an expense from the New menu. Select the vendor or seller, choose the bank account the money came from, and use your vehicle asset account on the expense line for the full purchase amount. This way, your asset, your cash, and your reports all stay accurate in QuickBooks Online.